Ladies and gentlemen, I'm very pleased to be here again, and thanks for the nice weather. I actually got out a couple of hours and enjoyed downtown Hamilton, and it's hugely pleasant. I'm going to, as Cheryl previewed, I'm going to talk to you about 10 or 11 economies. What we decided to do this year is kind of examine the United States and what's happened during the economic crisis into 2011. So we've updated the previous studies, and all of the data and the information is in the back of the room. And what I'm going to do today is talk a little bit about what we found in this year's study, and then there's an enormous amount of interesting information, not because I prepared it, but because it really is, I think, hugely interesting in the study. It's very complicated and very detailed with charts of data on several countries. I'll give you those countries now. And then I'm going to talk a little bit about what this study implies, what I think this study implies about pivoting in a new economy in the world driven by new actors. I mean, the most important thing we all know in this room is that Bermuda is no longer only a regional economic partner with the United States or North America, vaguely with Europe, and it's now really a global partner, and its regionality is disappearing very quickly, and there are very significant forces blowing from Asia, China, and the United States that push Bermuda, as every other jurisdiction, in this direction. So we expanded the study to include China, India, Singapore, and Hong Kong, and in Europe, the UK, Switzerland, Netherlands, Ireland, Germany, and France, and we stick with the United States. Is a little bit of a preview. India, I'm going to talk about India in the end of the presentation, but India is not on the map with Bermuda. India has a lot of capital controls. It is significantly involved with Mauritius. So there's a lot of money pouring out of India, illegally, I think, but I won't even hit that ball. As capital controls come off of Indians, they will continue to use the same jurisdictions that they used before, and that's something I think deserves attention. So we expanded the study geographically, but we also expanded it outside the pure real economy. All the last three studies have been about trade and investment with the United States. What are multinationals in Bermuda doing in the United States? What is the level of trade in services and in goods between the United States and Europe, United States and Bermuda, and how does that interact? This time we did that, and we looked very closely at trade and services among all those 10 jurisdictions and Bermuda. But we also expanded to flows and positions of financial markets, capital flows, and so this big story about foreign direct investment, retained earnings, as well as portfolio debt and equity, as well as reserve positions, becomes more manifest in this study. Let me. Okay, so let me just give you two things off this slide. The first thing that you see is that Bermuda is a very big player in the world economy, $180 billion worth of trade and investment with these 10 key markets. I mean, there's no surprise. I sort of sifted through a lot of economies that I thought should be nominated: South Korea, Taiwan. And these economies, I didn't expect to go to the Netherlands in this study. Netherlands was screaming from a corner of the database and had to be included. So But what you see is if you sort of cherry pick and go for the 10 leading economies that explain 80 or 90% of the economic relationship of Bermuda with the rest of the world, that there are four really significant numbers. One is $80 billion worth of two-way trade. That's in goods and services, so all the fees that are collected between the service industries in Bermuda and the other countries. Two-way trade, exports and imports into Bermuda with these countries. The second number is $100 billion worth of value added or sales. It's really value added produced by Bermudian multinationals, Bermudian transnational enterprises in these 10 economies. Fourthly, almost $1 trillion, $939 billion of inward and outward investment between Bermuda, not investment, of flows, financial flows, between the United States and the two biggest relationships are Netherlands and right now are the Netherlands and the United States. It accounts for more than 50, almost 60% of flows of inward and outward investment, foreign direct investment, portfolio flows. And we'll get into that a little bit as to why that is, but almost $1 trillion as domicile for equity and retained earnings flowing in and out. That puts, that implies that when you add all this up, that Bermudian economy is producing about 600,000 jobs in these 10 or 11 markets. 10 markets, not counting India. And we'll parse that down a little bit, but it's more than, substantially more than most economies in the world in their significance to the world economy. So basically, as Cheryl previewed, Bermuda is 20th in all of Europe. Bermuda is 20th as an international economic partner with Europe when you add it all together, and is 10th in most of the significant indicators in the U.S. market. Yeah. So why is this? And I'm going to go a little deeper, and I'm going to give you my kind of snapshot of what I think Bermuda is supplying, what it is and what it's becoming. First of all, traditionally, conventionally, historically, Bermuda is a niche capital market, is a niche player with the U.S. market. So maybe a long time ago, Bermuda was more significant with either the UK or Canada, but the relationship with the United States is on many planes, from captive insurance to reinsurance to investment funds and investment and pure FDI, foreign direct investment in the United States. The relationship is large, but it's a niche. Bermuda represents about $30 billion worth of investment funds. It's not the largest investment fund jurisdiction, but it's more than $100 billion worth of insurance capital. So when you take all that sophistication and put it together, it has a significant place in many particular types of markets in the United States. And it actually fills, as has been noted many times before, fills many types of capital shortages that the United States market runs into. The United States is a rich country, but there are many markets that it ignores. Infrastructure, farmers, where the governments enter into it, and the private sector often goes to Bermuda to raise money for these areas where there's otherwise capital shortages. The second thing that comes comes off this slide, I think bears interest is that Bermuda is much more significantly a global player. And so you see that most of the growth of the Bermuda reinsurance business has not been with the United States in the last, during the economic crisis. It's been with they're pivoting. Bermudian insurance is pivoting slowly, surely, inexorably toward Asia and other markets. And so there's a growth of other regional markets for the insurance business. So that means globalization. That means Bermuda could be a global platform, or it's just one of other regional platforms the insurance industry that's headquartered here will be availing itself of. The second and third are something that you see in the literature all the time, and we're going to go into it quite a little more with focus. One is something called a reputation as holding company centers. So that's where you have a company that does absolutely no business legally in the jurisdiction, but is incorporated for regulatory and for tax or other reasons in the national jurisdiction, Bermuda, but does no business in Bermuda and only does business as a holding company in the United States or in some other international jurisdiction. This is growing like topsy. 15 years ago, the United States, 90% of the value added of international companies was under the jurisdiction of incorporation of multinationals. You collected data based on a form of company that was incorporated in the United States and met multinational characteristics. Today, only 60% of value added in the United States for international value added exports and imports, business, subsidiaries business, only 60% is carried out by multinationals, US multinationals. The rest of it is carried out by US holding companies. US holding companies who have established themselves in the Netherlands, in Bermuda, in Mauritius, and in holding company centers. Germany is not a holding company center. The Chancellor of Germany has said, I don't want holding companies. I want no regulatory jurisdiction that would allow holding companies to exist in Germany. So there are choices made by countries about whether you're going to do business as a holding company, which I think is the future, which I believe the statistics even in the United States shows that it's the future of international business, much more flexible, much more interesting to manage, easier to set up. So there's a lot of advantages to holding companies, and it's no longer possible to sort of run things out of a platform out of one country as if you're a domestic company that has an international arm. The other thing is, the other term you see is offshore financial centers. Offshore financial centers, and we'll talk about this in the next slide. Yes, offshore financial centers are also growing substantially. And it's one of the biggest aspects of business that's growing. This is this slide. I apologize that you can't see it well, but it's basically 15 years of data. It stops before the economic crisis. I haven't had a chance to update the slide. It's not my slide. This is a slide from the Bank of England that was presented by Andrew Haldane a year ago. It's based on research done by Bank of England and the IMF, and it's based on newly available data in capital market flows and in offshore financial centers. Now, typical of the Bank of England, they use a stoplight approach, which is green countries, yellow countries, red countries. I don't think there's any ethical or moral issue about why each one is colored the way it is, except to distinguish them. The ones in the center are yellow, are advanced economies, United States, Japan, United States and Japan, and what am I saying? London, England, Germany, and so on. The green ones in the periphery are emerging economies, China, India, Argentina, and the red ones are offshore financial centers. These two that are characterized are Hong Kong, Singapore, the Asian market, and the other one is Bermuda with a few other Caribbean jurisdictions aggregated. What do you see from this slide? I just want to show you how much this financial centers, capital flows are growing, and more importantly, the significance of offshore financial centers. So 1990, there's no green, there's hardly green on the chart. There's hardly red on the chart. By 2005, pretty much the center, yellow, the core of the capital flow story, capital markets, has grown and has remained stable between 2000 and 2005. And what's really growing between 2000 and 2005 are the flows around the periphery. So it's done. The flows between offshore financial centers and the core, Bermuda and the United States, Bermuda and London, Guernsey and London, Hong Kong, Singapore and China, that's over. No, I'm sorry, that's not over. But the core is finished growing. And what's really, new lines are appearing by 2005. New lines are only appearing, and growth is only showing up in thicker and thicker lines around the periphery, between Mauritius and India, between China and Hong Kong, between Bermuda and other jurisdictions in Asia. And what I think is going to be more, I'm putting together the data together for 2010. The data is available, and this is something that's new to us all. The data is available, and I just got to see what happened after the financial crisis. Did things disappear on this chart, and what has grown? But I expect that this trend of growth of emerging market financial centers, emerging market capital markets, and offshore financial centers is going to be the story for the rest of this decade, and it's going to be the story for a lot more about the Bermuda-U.S. relationship, and we'll talk about that in a minute. So I just wanted to show you that this is where a lot of growth is happening. There's growth in trade relationships, but this is where really offshore financial centers is really something quite remarkable. So let's go a little deeper. So I gave you a little preview about what the world looks like, the 10 markets. Let's go a little deeper, and there's quite an extensive number of charts and analysis for the United States. I'm just going to give you what I think is the top stories. We've already talked in detail somewhat about the story about insurance and reinsurance. The United States and the United States and Bermuda are hugely intertwined over insurance and reinsurance. But let me just give you kind of the findings for 2011, which is where we are in terms of U.S. Government data in the relationship with Bermuda. Bermuda's largest United States is Bermuda's largest single market, and it's the U.S.'s largest economic partner in the world, 10th largest economic partner in the world. Bermuda's business investment has accumulated $55 billion worth of direct investment, FDI, equity retained earnings debt, in the real U.S. Economy by 2010. And even as investors pulled back from the United States during the crisis, so even as other nations, UK, Canada, were forced during the last, or did during the last several years of the crisis from 2008 to 2011, 2010, Bermuda expanded. So the relationship, for a host of reasons that we can discuss, is intensifying between Bermuda and the United States. It's not intensifying as quickly as with Asia. So growth over the last 4 years for Bermuda and the United States was 80% increase. Growth with Asia is 200% increase. Growth with Europe is 100% increase. So the United States is a big thing. It's more difficult to get big growth numbers out of that, but it's also true that they were the core. The United States is the core of the economic crisis, and for that reason, the economy has pivoted. The world economy has pivoted for several years, And that's both of those are reasons that we see these trends. China, Hong Kong, Singapore. As you undoubtedly expect, Hong Kong is the largest trading relationship between Bermuda and Asia. There's about $1.4 billion worth of Bermuda exports per year in service fees since an increase since 2000. This reflects Hong Kong's large role in offshore global investors for China. And in the study, I give several anecdotes or indications about how you can accumulate and explain the $1.4 billion. And it's kind of randomly interesting. Private equity for many years in the 2000s was a very important aspect of U.S. international investment. Private equity would find partners in China, and at the same time we were going into a kind of fabulous, as they say, world of manufacturing on contract from China. Build a factory, build chips, sell them into the United States with a marketing operation. And that becomes something that private equity can do and multinationals cannot. So this holding company idea was manifest for a decade, has been manifest for a decade in the US computer chip industry. Commodities change hands, people sell or bankrupt. They sell off, spin off various aspects, whether it's Motorola or others. Sell off this to private equity. There's an interesting tax effect in that if you sell that operation, you no longer have to worry about regulations in the United States against corporate inversions, and you can establish in Bermuda and have all of the tax benefits that would otherwise be denied because Congress is so upset with 20 years ago with inversions. So Bermuda and Hong Kong are closely linked because Hong Kong is the jurisdiction of choice on investment for China companies that don't trust regulation in China. They don't like taxes in China. They don't like regulation in China. They like it better in Hong Kong. Hong Kong likes it better in Bermuda. And U.S. investors, private equity investors, like to be able to get their money out of a Bermuda corporation rather than worry about it somewhere in Asia. So it all came together, and that's the kind of opportunity that sort of drives holding companies and offshore financial centers these days. Finally, China and India both have small, significant, it's insignificant for India's relationship with Bermuda. China has direct relationships, investment relationships, no matter what the regulatory jurisdictions say. China still, SOEs, state-owned enterprises, do invest out of China directly into the United States and in Bermuda. This is a distinction that will probably be more important through the rest of this decade and into the next. So China and India are both growing, but they are small at this point, and it's not driven by, in my opinion, and you look at the numbers and the difference in, you run little regressions on taxes, it's not driven by taxes, it's driven by regulations. It's driven, when somebody changes a capital requirement, you see more investment. When they change a tax rule in Asia, you don't see a change in investment. So it's something that should be looked at more closely. But my sense is that there's a key here to being competitive in this economy, world economy, and that has to do with the regulation of holding companies and offshore financial centers. Netherlands and Ireland, very interesting story. They are hugely distinct, as I said, as holding company centers. They're hugely distinct from old Europe and from the UK. UK deals with the world economy, not so much through holding companies. They're old-fashioned, direct kind of vanilla envelope investor, and they put their money into multinationals, much like the United States does. But the euro crisis has had an effect with Bermuda on Netherlands, on Dutch and Irish investment. What is Dutch and Irish investment? Ireland is a complex story because it involves insurance and because there's a number of financial aspects to it. The Netherlands is a pure U.S. multinational sales subsidiary play, and Bermuda has been a big part of that. The Netherlands is all sales in Germany and France of Microsoft and Oracle and Google are booked in the Netherlands. They're not booked for tax reasons or for regulatory reasons in Germany, because Germany is not a holding company center. So those sales are booked. There's sales reps all over Germany, but they book them into the Netherlands, and Netherlands promptly sends them either to Ireland for taxation or to Bermuda. And retained earnings are accumulating in huge amounts from the Netherlands. During the euro crisis, Germany sold less sales booked to the Netherlands. Netherlands pulled back from Ireland. Ireland pulled back from Bermuda. So you see a kind of ripple effect over the last 4 years. Okay, there were some redomiciliations with insurance companies, but I think that's also indirectly driven by this story. The big story is that with Europe, with old Europe, Germany, France, Italy, the big sales places on their back, with the euro crisis and the economic crisis, you saw a contraction of all of the investment from FDI, foreign direct investment, retained earnings, equity. You saw a retraction, negative numbers appearing first between Netherlands and these countries, these large countries, economic entities in Europe. And then as the Netherlands began to shrink, they pulled out of Ireland and Bermuda both. So it's kind of flat. The final story is it's still huge. Google and Microsoft are still booking and have positions, very large positions, but it's not growing the way it was up until 2007 and 2008, which was, leaps. It was by the hundreds of percentile points. And so it's somewhere around, right now, Netherlands' position in Bermuda is about $200 billion one way, and the reverse, and Ireland's is down to about 100 billion, and that's either flat or contracted since the beginning of the crisis. So there's a story to be told here about the Netherlands, because when you look at the service industry business fees that go on at the same time, you see that business that they do in trade with Bermuda in fees for accountants and for banking and for investment, those fees increase as the investment level from FDI from these American companies are booked into Bermuda. So, so you actually see a relationship that needs to be explained. It needs to be understood better about how retained earnings and these little holding companies actually drive real production of services among the service providers in Bermuda. But it's there. The numbers show that there's a positive and discernible relationship. When one number jumps a lot, the other number jumps a lot. It's kind of called regression analysis. So there's something very important about Netherlands that we're going to talk about in a minute. Last slide, almost the last slide, second to last slide. Compared with other regions, Europe has shrunk with Bermuda. So, Switzerland, Germany, France shrank in its relationship, both FDI as well as with trade and services and fees with Bermuda over the last 3 years. They were never burning the world up with Bermuda, but they've been here. It's largely, I suppose, has to do with their internal decisions as well as relationships with the United States. but the biggest market was Switzerland, which it's not totally unexpected, given that Switzerland is an offshore financial center, given that Switzerland is a holding company center, given that Switzerland is an insurance, is in itself an insurance capital. A huge relationship with positive and negative imports and exports with Bermuda shouldn't be in any way surprising. Yes, they're a competitor. Yes, they are a collaborator. That Bermuda, just like the UK and Ireland, they found they could not do business only competing with Bermuda. They had to be collaborating with Bermuda too. So it's a nuanced story. Switzerland's big. The UK remains the largest largest overall economic relationship from the rest of Europe, not Netherlands. With really significant amount of trade in services and goods. Okay, so what does this study suggest? So I looked at the numbers. I've done a lot of, and we've talked, Cheryl and I have talked, and even though Clay Witt won't talk to me, he won't admit talking to me, and he said it was just pure irony that we both came up with knowing how to spell Mauritius. It's not true. There's no gap between any of us. Let me just talk about what I think of the implications are. First of all, for the United States. Okay, biggest relationship, and the biggest relationship. The relationship is founded on insurance and is founded on niche capital. There has been historically a big discussion about tax havens and money laundering, and this whole hoo-ha. Bermuda has, Bermuda, as you know, has responded immensely to regulating and putting in place controls and transparency for taxes and money laundering and criminality and so on. Not a big problem for Bermuda, but you can never be too sure. The issue, I think, now is not about taxes. The U.S. Congress is frozen. It's frozen until November 6th, and it's going to be frozen for 4 years after November 6th. If they can't deal with Obama this year, they're going to try and deal with him 5 years from now. And the U.S. Congress has, many issues in front of it. A lot of them are taxation. There will be someone who's going to get hit with higher taxes. It's not impossible that offshore jurisdictions some players in the U.S. market, particularly Mitt Romney, would get hit with higher tax bill. But there's no predicting. The lobbying and issues around U.S. congressional legislation, very difficult to predict. All I can say is my opinion is that in terms of real effect on the international economy, it's going to be hugely more about the Fed than it is going to be about the U.S. government. The Fed is poised with QE infinite, QE3, quantitative easing 3, to be putting something like $500 billion or more dollars into the world economy. That's not money that's going to be stimulating only Europe and the United States. That stimulus of $500 billion a year or more, whatever it takes, is going to flow to Asia and to any other jurisdiction that has a bank that has a window on the Fed. So that money will flow into Bermuda, but it will flow into all the other offshore financial centers that we've seen growing for the last, on that chart, we've seen growing. That money is going to flow into those offshore centers, because why are they centers? Because they have banks that have windows in the Fed. So that money is going to flow into the world economy, and it's going to go on forever. Not forever, but it's going to go on for a long time. Long after you have forgotten this presentation, you'll be saying, why in the world am I having so much trouble, dealing with my issues in financial and capital markets? And it's because the Fed is just pushing and pushing and pushing. Why do we care about this? Because you are an offshore financial center. and that may be as bad in the future as a tax haven, depending on how well the Fed does managing all of this, how well the Bank of Bermuda, the BMA does in managing all of this. You don't want sudden stops. You don't want asset inflation, asset price inflation, and so it's really the next big thing. I would say forget about tax havens, because I don't think the U.S. Congress can organize anything that will take you or your interests on in a Congress aligned the way it is today and where it will be on November 6th and 4 years after that. I'd say it's more a game about the Fed, and you need a plan for the Fed. I really suggest that since you're going to have to be an offshore financial center to survive, you're going to have a plan for the Fed. Maybe you already have one. Good for you. Bermuda needs to meet the competition of offshore financial centers. So, okay. It's hugely important to go to Asia and tell them that you're not a tax haven and that you're not a money laundering center and that you're well regulated. It's even more important now to be in the business of articulating yourself as an offshore financial center. It's not going to be bad, because everybody's going to be an offshore financial center, from the World Bank, which is now the Fed. The Fed is onshore, and everybody else is offshore. So that's the lesson I hope that you take away from this, is that you need a regulatory response as well as a messaging and outreach response to the fact that there's going to be huge increase in competition as an offshore financial center. If you don't think you're an offshore financial center, you're missing an opportunity. If you don't want to be an offshore financial center, your insurance industry will leave. In my opinion, I think the insurance industry will go to offshore financial centers. Asia is a priority. I think you already know that. I'm sorry to bring that information to you, because I think that you're already convinced. The U.S.-China relationship is what drives it. The U.S.-China relationship will change because of what the Fed is doing. The Fed is expanding its money supply to the world because they're not only worried about Europe, but they're also worried about China. So much more money, private portfolio as well as public reserve money, is going to go into China. India and Mauritius. We all came to the same conclusion very quickly, which is India is hugely underweight in its relationship with Bermuda, and yet the mystery is that even though there's big capital controls on the Indian business going out of India, there's nothing going into India for a host of reasons. The Canadians and the Europeans are not investing in India because there's capital controls, because there's investment restrictions and obstacles. It's very difficult, and the election process and the political process in India right now is even more complicated. So nobody is going in, but everybody's leaving. And that means that I think that based on the numbers that between Bermuda and India, there are none, that Bermuda is underweight in its relationship with India, and something, Bermuda should undertake something to become more familiar, more of a recognized face in India. And Mauritius, that may be the key. Partnerships with Mauritius, who knows? I can't speak Mauritian. Last thing is Netherlands. Okay, I think there's an issue here, which is Netherlands, because Germany has shrank, Netherlands has pulled back from Bermuda. I don't know if there's anybody in this room can explain to me how the Netherlands and Bermuda became such an intense partner. I mean, it's the biggest relationship except for the United States, it's the biggest relationship that Bermuda has. In the sense that financial markets and FDI, something we all love, something that's all highly valued and is a very positive kind of concept in the world economy. Netherlands is it. Netherlands is big besides the United States. And obviously it's all connected to the United States. So Bermuda's in a big place, being right next to the biggest economy in the world. That's the most successful economy in the world. That makes Bermuda's aura best. My problem is that as the 4 years turns into 6 years and Netherlands retrenches and moves out of Bermuda, that the lawyers and the accountants and the government officials will forget about Bermuda. The next time they open the book and say, let's all go and look for a Dutch sandwich, they won't think of Bermuda because some guy from some person, some lady, will be there from the Caymans or from Mauritius or someplace else, and they'll do the Dutch sandwich and the Irish calculations. They'll do it with another jurisdiction. I think it really is important to rebrand with the Netherlands and become, if you're not doing already, if you don't know the history of why it is that you're so hugely successful with the Netherlands, that you need to be able to recreate that story. So I throw these things out in front of you. These are my opinions. And I've tried to convince Cheryl, and she's, happy but not happy. I throw this in front of you for discussion, and I've been hugely interested to do this study. Every year you make me do it, and it's against my better judgment, and the result is that I grow in various ways because I find out all these new things about how the world economy works, and Bermuda is driving it. So with that, I wish you all the best success, and thank you very much.